like to thank everybody for attending this webinar. And the idea that we're going to be talking about here is all of the ZoneTrader Pro indicators working together and working with Bloodhound. Little bit on the risk disclosure, of course, that futures and forex trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than their original investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. And with that said, a little bit about me. As Keith said, I originally created ZoneTrader Pro because I spent probably $30,000 or more going to seminars and seeing things that looked great on Saturday, but then after you spent $3,000 buying their system, the so-called signals would disappear, redraw, and I'm sure that's a pattern a lot of people are familiar with, unfortunately. And that kind of makes me a little bit different from other people that sell software, is that the software that I am selling is software that I'm actually using. The improvements that I continue to make in ZoneTrader Pro are for my own personal trading, along with any of the customers that use the software. And in 2017, I began developing the order flow suite because other order flow vendors were charging upgrade fees. When Ninja went from version 7 to version 8, they were charging yearly quote-unquote maintenance fees. There is no maintenance fee as a vendor, so I thought that was kind of hokey of them, and I decided to go down this route of making it for myself. And then in 2019, I significantly added to that toolkit because I wanted to see cumulative delta and divergences. And what I ended up with is an extremely powerful tool that we're going to be talking about a little bit more later on. So what ZoneTrader Pro is a combination of price, order flow, and divergence patterns. And order flow and price are really two of the most important things because you can't have one without the other. You can't have price and you can't have a price pattern and not have an order flow pattern, and vice versa. If you tried to trade solely an order flow pattern with no idea where your support and resistance was, you're going to lose money. And trust me, I've seen these order flow patterns now for about a year and a half, and it's really nice when you get a 10-point move and everything's beautiful, but it's really kind of ugly when there's a battle going on between the longs and the shorts. So for that reason, we use a combination of both price and order flow. And the price patterns, they include reversal patterns, exhaustion patterns, trend, divergence, and strong trend patterns. The ZoneTrader Pro indicator suites that are Bloodhound compatible, all of the price pattern indicators, with the exception of something that I call $tick divergence, are compatible, and the complete order flow pattern matching suite is compatible. So on the price pattern side, that's my exhaustion trade, my reversal trade, my trend trade, and a trade that I call the broken reversal. I also have strong trend trades that are also compatible. I didn't list them here because it's not a trade that I necessarily take all the time, but it's a pattern that I want you to be aware of because it is a pattern, and as I'm going to show you from a real-time example from just this afternoon, what the market does predicts what we are going to be doing next. So it's real important that you understand all of these patterns and not just the patterns that offer good risk reward. The patterns on this slide are the patterns that offer really good risk reward. So the first thing I want to talk a little bit about is my order flow suite. And in the order flow suite, everybody looks at these numbers, and when they first came out in 2004, I had purchased, or I had rented, sorry, you can't purchase Market Delta. I had rented Market Delta, and I thought this was the greatest thing in the world because I could see these numbers, and I immediately started throwing trades just based on looking at these numbers. And that didn't work out too well. A lot of things are going on in these numbers, and unless you have a computer that and a software program that is telling you what these numbers mean, these numbers just by themselves, they are 100% completely useless. And to give you some idea, here are 4 order flow bars, and they all got numbers in them. They're all down bars, and they all have information, but only one of these bars is useful for anything. And while we're looking at them right now, take a guess, which one do you think is useful? And we'll answer that question on this next slide. Here, this was the bar, the one in the middle, this was the bar that was useful. And there was a lot of information on this bar. The first thing that we see is you see a round circle at the top in black with a negative 877. And that's telling us something. That's a indicator that I call delta strength. And it's telling us that there was extremely high volume on that bar. And the delta strength number itself is a very strong number. And the reason that that number is in black with the high volume is that's basically giving you an idea that this has a very good possibility of being a reversal bar, because that is where the sellers are coming to meet the buyers and trying to reverse this down. The next thing we see is we see that we had our point of control at the top of the bar. We had something called a stopping ratio. We had trapped buyers, and we also saw absorption. The absorption is the red boxes, and you saw absorption in all 3 of the upper price levels. I also have another indicator. There's also a green circle down at the bottom, and that 2013 represents the change in the delta from bar to bar. Now remember, I called my indicator the delta strength. The delta strength is not the delta of the bar. It is 100% completely different. The delta on this bar was actually positive, and that's why we see the change in the delta for a positive 2,000 contracts. And obviously an absorption and distribution was going on here also, a divergence pattern that we'll be talking about a little bit later. We also had an exclusive signal that I call the ZTP order flow. That's proprietary to ZoneTrader Pro. And that's really about it. There was a lot of information in just that one bar, and most of it's pretty impossible to pick up just by looking at numbers. So the order flow patterns are completely available to the Bloodhound indicator, and at the current time the delta strength and cumulative delta are in the process of being programmed to be Bloodhound compliant. They are partially available now, but for historical reasons they would not be. They would be available somewhat in a live setting, but to see something historical, you need to use tick replay. And with tick replay, that is something that is not going to be available anytime soon with Bloodhound and Zone Trader Pro. But this is a work in progress for the Delta Strength and the Cumulative Delta, and something that I plan to be adding and doing some work on next month. Now, what I'm the whole thing about Bloodhound, of course, is developing a strategy and back testing it. And one of the things I did for a previous webinar was to basically look at a strategy of something like this. And, obviously I'm going to tell you that this is not a tradable strategy. There is more work that needs to be done on this. You see on this chart, you see red and green lines that go horizontally across the chart. And those red and green lines are something that I call extension zones. And an extension zone is being created by market orders. And in the settings that I have here, I'm creating those market orders at a rate of 4-to-1. And again, a little bit of a disclaimer here. What we're going to see here and the numbers I'm going to be talking about, they're not meant to represent actual entries that you're going to be able to get in real time, because obviously there's going to be a tick for slippage, but the overall idea is what I want to show you here. So there was, back in July last year, there's 41 of these trades, and only three of the 41 were clear losers. The majority of them had either the ZTP order flow or the POC extension signal, and those are the signals that I consider to be the strongest. 89% of them had them on the smaller time frame chart. And the trades that I'm looking to get into are, I'm looking to basically get 3 points out of every trade, because you can see how the distribution is. A majority of these trades got between 4 and 4 3/4 points. And after we give up a point for allowing the order flow to confirm the entry, we're getting 3 points out of that trade. And if we got 3 points out of every one of these trades, obviously we'd be a very happy camper. And you can see the distribution that there's only 3 trades here that hit the grand slam home run. But I would rather hit the singles and the doubles and take 3 points out of every trade, rather than waiting for just 3 trades that get 8 or 9 points. So I want to talk a little bit now about the cumulative delta, and because this is going to be a really interesting part of the software for you. So every bar is going to have a delta, and the delta is created by either a buyer or seller making that market order. And that buyer or seller making that order, they're considered the active participant and not a passive participant. And we're going to be talking about passive participants later when we see these divergence trades which have accumulation and distribution, because that's what's going on there. The passive participants, they're using limit orders in order to do their accumulation and distribution. And from bar to bar, we develop what's called a cumulative delta, and that's the total of all the deltas from a specified start time. And we can find that information down in the data section of a volumetric chart. And the thing that I always hate about other people's indicators, they put information down there on the bottom that you can see down there, but you're never looking down there, so it's 100% completely useless information unless you're just trying to get an idea for an indicator. Now, NinjaTrader has a cumulative delta, and so let's take a look at what it does and what the difference between what they do and what I do. NinjaTrader displays this information. They put it on a bar graph, and that's fine, down in the lower panel. We see that the cumulative delta is making a higher high along with the price, and that information that Ninja's giving you is 100% accurate. Not a problem with any of that data. And if you looked at this, is there anything giving you a real good reason to take a short trade? Well, I'm going to display that information too, and I'm going to display it in a line graph on the bottom. Okay, so basically the same information. And with the patterns, the price patterns, we see that we had a price pattern which I call the $ tick divergence here. And that's a price pattern divergence involving the NYSE tick. And if I knew this is probably a reason to be taking a trade, but not a great one. And what's really the difference between these two indicators? Well, there's actually a major and fundamental difference between the two. And that's if you want to filter for large lot traders trading contracts 25 or more. It doesn't really matter. You can set whatever filter you like. With my indicator, I am filtering for orders of 25 or more, which is the green line. And I also put the red line on here of contracts between 1 and 7, which I basically consider what is the dumb money. And as you can see, what is happening in this trade is price was taken higher by the small lot traders, while at the same time the large lot traders were sellers on market orders. And that's kind of important information. And that now gives you a real good reason to be taking this trade. And so you might ask, well, NinjaTrader has a filter function, don't they? And yes, they do. But here is again, the major and the fundamental difference between what Ninja puts in their software and what I've gone and done with my software. The NinjaTrader cumulative delta, that is picking up the size of the fill and not the size of the order. And that is a huge difference. The size of the fill is 100% completely useless information if you want to look at what the large contract traders are doing. So if somebody sells a 100 lot, that 100 lot is not being picked up as a 100 lot in the time and sales. So if a 100 lot was sold and you had a filter of say 25, only if there was a buyer on the other side that took 25 or more of those lots would you be able to pick up that trade. And if they all went to buyers of anywhere from 1 to 5, 1 to 10 contracts, Ninja wouldn't pick that up and record that in the cumulative delta if you're filtering for larger trades. So the fill is what you see in the time and sales window. It's not the order that you're seeing, and that is super important. So what the ZoneTrader Pro cumulative delta does is it goes back and it reconstructs this tape, and without the tape reconstruction, the size of the fill is what's being reported. With the tape reconstruction, we see the real size of this order, and this is the cumulative delta divergence in the large orders that we're seeing right here. Now, when we just see this, it is a really interesting and good reason to trade, because we know that the large lots are the people that are wanting to get short. With tape reconstruction, we can also see the cumulative delta being used to confirm a trend. And again, this is the cumulative delta is reflecting a filtered value. And here we have a pattern trend trade, and with the pattern trend trade, the you just have a lot more confidence that you have thousands and thousands of contracts behind you making this trade, that you wouldn't normally have this information. And to me, again, that's a huge amount of information. The delta strength indicator is also working with this tape reconstruction, so that the green dots that you see on this chart, what they're representing are individual trades. And I believe I had the filter set for 75 or more here. So what you're seeing are individual trades go off. Again, that's super important, because right there where we're looking to get long at the trend trade signal, well, you see 3 large lot traders coming in. So again, a real interesting indicator that ends up confirming what your trade is going to do. Now, if you see something like right after that, you see a -4, and you're like, well, the filter was set at 75. Well, we have what's happening on that bar is we have multiple things going on. We have both buyers and sellers, and in this case, the net of the delta strength was just a -4. So that's what's going on with that. Where you see a blue or a black, that's going to define something that is high or extremely high in volume for that bar. So what we ended up having is, your basic trend trade pattern, which is something that Bloodhound picks up. Support that with the large lot traders from the cumulative delta, and basically we end up with a 10-point trade, 11-point trade. And then again, kind of interesting, we see that large lot trade coming in at the top of 399, which was picked up by the delta strength. So what is the delta strength? Well, the delta strength is not the delta of the bar. It's a proprietary calculation by Zone Trader Pro, and it incorporates the tape reconstruction filtering that I talked about earlier, to filter for only large lot traders. Now, I was playing around just right before Christmas, and I was typing a 50 into the chart indicator, and I accidentally typed 500. And this is the chart that came up, and I've never seen this before. So if we recall December of last year, we saw how the market was in a pretty steep trend selling off. You can see the price here of 24.80. And what I found interesting about this was, here's some guy coming in, and he's basically buying. He basically bought, I think it was something like 7,500 contracts right there. And after buying 7,500 contracts, within 20 minutes, the market was 37 points higher. Did he sell? Who knows? He didn't sell on market orders. But if he did sell them on limit orders, well, somebody did the math. I think it was something like about $8 million. Now, what I also found interesting was throughout the day, this guy, after that 37-point move higher, this guy ended up coming back. And throughout the day, he's making these buys. So these are several thousand more contracts in the middle of the day. And like I said, this is highly unusual. I've never seen this before. Occasionally you see a 500 lot go by, but you don't see somebody basically accumulating what is going on here. And then at the end of the day, you can see that, remember, we were up at 2480 and now we're down to 2405. And at the end of this day, this guy came back and bought a few thousand more. Okay, not a, this guy still wasn't done. He had to buy some more in the close, because who doesn't buy thousands of E-mini contracts when the market is crashing 80 points? Everybody does it. Now, then this guy figured he needed a Christmas present, and on December 24th at the close, as the market was crashing again, we're down another 70 points. Well, he figured it was a good time to be throwing out some 500 lot orders. Bought a few thousand more. And now, obviously, we know where the price is today, but the following day, December 26th, that was the record all-time move in the S&P. And obviously this guy, whoever did it, the Fed, who knows, they made a lot of money. Somebody got a really nice Christmas present. Like I said, this is some super unusual activity that was only able to be picked up through the Zone Trader Pro Delta Strength Indicator. One of the other really cool things about this indicator is that you can put this on a point and figure chart. And I never used a point and figure chart before until I saw this weird thing come up, and I was originally trying to put this on a Renko bar, but Ninja doesn't support tick replay on a Renko bar. So I said, okay, I want to see what this says on a point and figure chart. And what we are looking for is, and what I've got circled here, is what we're looking for is an up bar with a negative number or a down bar with a positive number. And the reason that that's important is what it's reflecting is either the buying or selling as price traded away from that apex, from that low or that high, before the bar closed. So these were large lot traders that were going against what they were basically initiating the profit taking or initiating trades at these highs and at these lows. So I thought that was a kind of interesting discovery in one of the charts I currently use. Now, getting more to what the webinar is all about, using Zone Trader Pro with both the price patterns and order flow patterns with the divergences, is you see on this chart what I've done is I've gone and created a template, and the template is basically saying, where do I have a order flow pattern along with a price pattern? And what is really, really interesting is when these occur at a known trade. So, what I'm looking at here is down at 950, 952. We have a counter trend trade with tick divergence, and it was also divergent in the contract itself. And then that traded into a typical trend trade, which then gave us, and I'm sorry I didn't get the label on it, but that's a distribution label right there. So the trades that are really, really interesting are these accumulation distribution trades and these trades that I call special divergence. You can see an example of the special divergence off to the left. And basically what I've done is I've created a special indicator based on the same concepts, but I'm looking for something specific, and I'm looking for manipulation by the large traders to manipulate the contracts and to get lower prices. So basically what the pattern on the left where it says no supply is saying is that price was basically falling, but it was falling again while the large lot traders were actually buying. So that is the divergence that it's picking up. So two things are happening. Large lot traders are buyers there, and the supply, what is there on the bid, well, that's being pulled so that the market can fall and the larger lot traders can get bigger or can get better prices. And Bruce is asking a question about whether or not this works for spot forex. I really don't have any idea. I've never tried it on the forex market. My understanding is that they don't report volume. That could be, that could have changed. I haven't looked at forex in many, many, many years. And what I'm looking for here with the ES market is I am looking for the market that gives me the most advantage. And there are two markets that do that. And the ES is one of them, and the ZN is another. I did a divergence and order flow chart last week for a video where I looked at a week's worth of the 10-year Treasury, the ZN, and I identified 34 divergence trades in a 1 week period. And of those 34 divergence trades in that 1 week period, exactly 0 trades were losers. And I put that video up. It's one of my recent videos. It's one of the last 3 or 4. I've gone and if you'd like to see that, I have a YouTube channel. You can get that from the YouTube channel or my website. It's just, I don't know that I have any advantages with Forex, Bruce. There's the banks hold all that information, and it's not transparent. So, I want a market that's transparent, and I want a market where I can get really good results. Also, on my front page of my web page, on my home page, I just posted a video there about the trades from last week. And if we remember last week was somewhat of a volatile week. And that's a really interesting video to look at, because what we're looking at here on this chart is the combination of price patterns with order flow and Bloodhound giving us those signals. And what I did is I looked at a week's worth of trade in an extremely volatile week. We obviously had a huge amount of China news, we had the Fed announcement, and then we had Iran shooting down a drone. So, it was anything but a quiet week. And the formula that you're seeing here of a price pattern along with an order flow pattern still worked out to be a 74% win rate. And the win rate for the divergence trades, and I'm only looking at 2 divergence trades. I'm only looking at the accumulation distribution and the special divergence, no demand, no supply. Those worked out to be 74%, but the number was actually higher, because if it was a trade like the trend trade off to the right where it was a combination of both, I just called it a win for the pattern, and didn't count it as a divergence when I actually should have done both. But the numbers for divergence was actually the same, working at 74%. One of the really interesting things about these divergence trades too is the way that we confirm them. There is a pattern that occurs. Everything about me is a pattern. The pattern that occurs on this is we see those extension zones that we talked about earlier. We about 80% of the time we see an extension zone created one tick from the high, one tick from the low. And that really makes sense, because if we're looking at that no supply trade off on the left, well, they're allowing price to fall, they're allowing price to fall. When they figured that they've got a good enough price, they just hit the market order button, they create that extension zone, and that's what's turning the market. Richard asks, how soon will the tick replay program be completed? It's not a matter of my completing anything. This is a known Bloodhound issue that has to be worked on with Bloodhound. But like I said, the price patterns and the order flow patterns, what we're basically seeing here, are 100% Bloodhound compliant. It's just the divergence patterns that you can see only in real time for that. Robert asks if it works for oil. Absolutely. I've got a few oil charts up there because along with, oil is a fairly well traded contract, and you have the same thing going on. You have them manipulating the contracts to suck people in, get them going the wrong way, and then these divergent patterns work. Now, like I said, I only focus basically on the ES and the ZN. I don't want to have 16 different charts open and hoping to get a divergence on this chart. It's just too much work to be looking at. And again, the really nice thing about these divergence trades is, and I talk about this in one of my latest videos, is you really understand how these like the distribution trade where we have the trend trade. Well, I make a big point of this in the video. This is when the cumulative delta turns and comes into play, because I showed examples of both when these trades work, you see the cumulative delta like you do in here selling off. But on other trades, you get 2.5, 3 points out of the trade, but the cumulative delta isn't confirming the trade itself, and then you get the opposite thing, such as a no demand or no supply. I saw a couple of those examples and I included them. And what happens there is the market went up 10 points in each of the on each of the instances. And Richard asked another question. Yes, this is only available on NinjaTrader, and so that NinjaTrader is required for this. NinjaTrader itself is a free program. Unless you are going to be trading with it, then you're going to need a paid license. But you would also need a paid license in order to have the volumetric bars, and the volumetric bars are what is the order flow. Kevin asks a question about a trading room. I don't have a trading room, Kevin, but what I do is, if you contact me, basically I'll bring you to my screens, and obviously this goes for anybody here. I'll bring you to my screens and explain what I see is going on in the charts, and let you watch for a couple hours. I don't like sending out charts because one of the things that I hear a lot is, "Oh my God, there's so much stuff on your chart," and I don't want to send things out that people are not going to understand natively, and so I like to, have everything in front of me, and so that people can ask questions. And if you need a couple hours to ask your questions, I'm here for a couple of hours. And that basically goes to my support policy also. My support policy is that it's unlimited. In other words, I will help you as much as you need help to get you there. And so that's definitely there. And Michael, yes, there's a whole section on the website just with training videos. So the what you really need to train with is knowing what a price pattern is. And like I said, I'm going to show you a real-time example when we get through the PowerPoint, because the price patterns set up what is coming next, and that's kind of really important. Now, one of the things I've also done is, like I was saying, look at what in this distribution trade, look at how the cumulative delta is confirming that. And you can see shortly after that trade, we got a reversal trading signal price pattern, and it just happened to have order flow. But if you look at what the cumulative delta was doing after it had made its apex there, it was coming off, and that was kind of a clue that you might be getting something better. The other thing that we're just not seeing here is we're not seeing the order flow charts. And what's really interesting is the two. I really only need two charts to trade with. I have this chart in front of me showing me the divergences and the cumulative delta, and I have the order flow chart. Those are really all I need to be taking a trade. What I've done is I've gone and I've focused heavily in the last 2 months on only taking what I consider to be the easiest trades, which are the accumulation distribution and the no demand, no supply. And and Richard asked if we could break down basically what we're seeing on the chart, and that just happened to be the next slide. With this new software that I've had come out, I'm taking data from the cumulative delta and displaying that so that I can use that in my decision to make a trade. And again, this is just information that you're not going to get anywhere else. So first off, again, we talk about this being a cumulative delta which is filtered. So this cumulative delta is looking at filtered trades of 25 or higher. And with 25 or higher, this is the numbers that I want to see. So as you can see above the trade, I've got something called KP2, KP3, and then there's a ratio right below that. And KP2 is the number that we get when we trade from a low to a high, or trade from a high to a low. So as we came down here, the KP2 number was kind of hard to see, but it was only 56. So with all of the back and forth of people doing their larger orders, this number right here was a 56. But as we traded higher, the KP2 number was really high at 4,633 contracts. And that gets to what the ratio is. The ratio is that KP2 number divided by how many ticks. So we can see how strong the large order traders are trying to push this. And in this case, they're pushing it kind of hard. They're pushing it at a rate of 210 contracts per tick level of large lot traders. And down, as you see down here, our division down here, is 27 ticks, which is 7 or 8 points, but there was only 56 contracts for the KP2 number. So that's a super low number of only 2. And what is really kind of interesting is that when we get into what I've seen, and I've only had these numbers for about a week, so this is something that is brand new to me and is what's currently being delivered to my customers. But I noticed that these numbers here, the ratio here on distributions and accumulations, you actually want that to be a high number. The higher the number, well, the better that's going to be when the trade works, because those are the people that are going to have to get reversed. And that's really what this distribution is telling us. So we have some really interesting numbers. Now the KP3 number, that is from a low to a low or a high to a high. So we can see that the KP3 number for this distribution trade was 4,689 contracts. So in other words, the contracts were higher, but price was lower. Hence, that's what we have the definition of a distribution. So some real interesting numbers that I've been able to come up with, and to go from there. It is actually very easy to integrate, Rich, the indicators with Bloodhound. I've been working with Bloodhound, and I have a Bloodhound template that you obviously see here, and this is what I deliver to my customers when somebody purchases. I basically, if somebody purchases, I go to their screens, I set up all their charts, and basically do all that. That's part of my setups. Mike asks, how long have I been implementing these setups? I changed, like I said, Mike, I changed my setup personally, my personal trading in the last 2 months, where I'm more focused on these distribution and these no demand, no supply trades. And there's a couple reasons for that. These trades seem to go very fast, and you're not hanging in them for a very long time. That, to me, that's great. They're also statistically somewhere in the 80 percentile range. So these are just, they're tremendous. And you get more of them per day, probably on the order of, sometimes 3 or 4 times the amount of trend trade or of divergence trades than you do with pattern trades. Now, that doesn't mean you just throw away the pattern trading when you have order flow, like we see here. By all means, no. What it means is you're given probably between a dozen and 20 entries per day of extremely high probability trades. And if you see something like this distribution and it's combined with a price pattern with order flow, well, you've got a lot of things going for it. And that's where I personally, when that happens, I add contracts in that situation. Um, and then no, order flow isn't embedded in this chart. It it's embedded as far as the Bloodhound is picking it up through the template, so you don't need to see it. You don't need to have it up. So I'm not really sure if that answered that question. Order flow is embedded with the Bloodhound template. So what we're basically seeing here is some kind of order flow pattern. The all these patterns, the zones are painted in advance of when price trades to that level. So for instance, you see right here the blue zone started to print when price was up here. So this gives us our target if we were short from back here for whatever reason. It gives us that as a target. Here, when price, basically, I use tick bars, and that leads me to a really good point that nobody has asked me, but I want to bring up. I use tick bars, and I don't use minute bars. A minute bar is completely useless, and because I need a bar to close. And some people say, well, 300 ticks, 400, that's super fast. No, it's not super fast. What I need is I need this bar right here to close so that I can develop a target right here. And that is a great target right there, because you see what happened. As soon as it touches my target, you got about a 2.25 point bounce out of that. So, I've got no idea that this is going to trade, several points lower. But if I'm in this trade from here, I'm using this as my target in my zone. And I don't know that number until this bar right here. So the patterns themselves, you can set the way I changed around the indicator is you can set the indicator to show you when you're going to be receiving the pattern. So that is most of the things are set. I set them to just 2 ticks. So when price is within 2 ticks of this zone right here, then you're going to start seeing the signal, and that signal is then exposed to Bloodhound. But it's something that you can change with the settings now, and I've done that with Bloodhound. I've also been able, I programmed in what I call a warning line, and the warning line is what you can use to use as a hard stop. So if the trade does hit your stop, so for like, here's this reversal trade that initially worked and we had order flow for, but then it traded here where my stop was, you would see a red racing stripe here for a sell. So that's also built into the software. I basically thought about all of this, and one of the neat things about this is Bloodhound is such a great program because you can do a ton of stuff with it, and by being able to do a ton of stuff with it, there's also a bit of complexity there. With the price patterns and the order flow patterns, that is super simple because they are just ones and negative ones. So we're just looking at creating indicator thresholds. But what you can do is, if you have something that you think is even better than my order flow indicator to get you into a trade, well, you can use it. When the distribution comes up and you have a better entry, use it. But like I said, in about 80% of these cases, you don't see anything better than a signal one tick from the high and one tick from the low. So it's hard to beat one tick from the high and one tick from the low. Um, so I wanted to kind of do a real quick video that I recorded so that you can kind of get an idea of what this looks like live. Okay, so basically what I did is I recorded the one of the first trade that we saw right here. And what we're seeing over here is we're seeing the KP2 and the KP3 numbers being updated live. So as price, what's happening mechanically is that as price traded down here to the low apex where you see the dollar sign tick at a negative 358, those numbers were quote unquote locked in right there. But what I found was really necessary is, and this happens a lot, is you would get your signal, price moves 5 or 6 ticks off, and then suddenly starts coming and coming back at you. And what I wanted to see is I wanted to see what that number was now live, and you know, give me some idea what the live number was. So now what's happened is we have now just formed a new zigzag here, and by forming that new zigzag we are going to update these numbers. And right now it's still reading out the old numbers because the bar is going to once again have to close to see the new numbers. So I'm going to start the video back up. We're going to get the close of a bar. There you go. So we now know that from this low point here to this high point here, the KP2 number 1422. If we're looking at taking this as a short trend trade, which is what's going to be coming up, we know that there is 2221 contracts supporting that as a trade. And again, now what you're seeing down here is the real-time number of you know, what this is real time. And what I'm doing is I'm pointing out what the ratio was when we got here. So it was 129. And this becomes interesting because this is going to develop into a distribution trade. So again, because this is something that's new to me, I don't you know, I'm still working with this thing. This is only a week old, and but you know, again, something that I see. So we price trades one tick higher. We're now up to 151. We're now up to 175. I think we're going to get a little selling in here. Yeah. So the bar closes, and now the bar closes out, and it was, the ratio is 159. Okay, so now it's kind of hard to see, but, and this kind of answers the other question. We're now seeing this as a trend trade indication in here. You're going to see me move the mouse. And let's just scoot this up a little bit more. Price traded down a little, and there we go right there. So let me just take that back just a little. Okay, so basically what we just saw right there, that's the exact point where we have both a trend trade plus a bloodhound order flow signal getting you into that trade with bloodhound. So that's really, that's the combination of the order flow bar, the order flow range bar closing over here on the left hand side. So what you're seeing here in real time is what my trading screen, what my personal trading screen looks like. And as you can see up here at a price of $29.54, well, at $29.54 and 54 and a quarter, we had two historical extension zones being created. So that's a good thing. These are areas where the market previously pounded price down and then pounded it into $29.50. That's where that started from. So when it got up and was trading at 54 and a quarter versus 54, again, boom, there they came and they traded that down. Now that's a signal that I'm looking for personally to get in that trade. One tick from the high, one tick from the low. You can also see in the previous high delta back there at 1024, you can also see that again there's that one tick from the high. It's just a really cool entry signal. Now what I want to draw your attention to now is look at what our cumulative delta is. Oops. Look at what our cumulative delta is doing, and that thing's going straight up. But what we need to update this number is we need a close above there. But we can still compare our KP2 number, which is now sitting at like 3,300, to this KP2 number, which was the historical of something like 2,200. So again, what's happening? Well, there was a whole bunch of buying that couldn't take that any higher. In other words, somebody's distributing contracts. Now, again, what we need is we need that little bit of push that we're going to get shortly, and then that will update the number and give us new values. And Mark is asking if the KP numbers help me to decide where to go short, and the answer is yes. I want to. These numbers are a strength number, and they're relative. They're all relative. Now, what you just saw basically in real time was as soon as the price had traded higher and our numbers got updated, we now got our distribution signal. And well, if you look at the order flow, oh gee, that's kind of interesting. One tick from the high again. Over on the order flow bar, I also want to make this point very clear. Nothing on my chart disappears, goes away, or does anything like that. But on an order flow bar where we have an open bar, well, price can trade higher, price can trade lower. So you're going to see the my order flow definitions going and coming and going and changing, and that's because the bar is open. But once a bar has been closed, like the previous bar did, well, then that is in stone now. And again, up there where we had the divergence, we saw the extension zone being created one tick from the high. The other thing that I want to see, which is actually preferable, but you don't see as often, is the red box. And you see the red box 2 price ladders down. The red box is for absorption. So what would ultimately be the best signal to have, and you do see it, but just not as often, is a box for absorption, and that is something that is really kind of good to see, because that's what we're doing. We're absorbing contracts, we're distributing them. That's exactly what we want to see. So that's basically the anatomy of that trade. I'm just going to forward it, and I think it ended up somewhere down in here. Oops. Yeah. So something like about a 5-point trade out of that. Um, I am looking at the numbers, and I do want to see those numbers as to help me make my decisions. And like I said, I think these numbers have something to do, especially if they are um, especially if they are high going into an accumulation distribution. Now, I'm going to end the webinar showing you this live chart from today. And, again, like I tell you, my favorite trades, because I can get 3 points out of them every time, are these distribution trades. This is obviously not cherry picked. This is this morning. Um, I will take a normal bearish divergence trade if it's also tick divergent, which this one was. So this fills my personal criteria for taking this as a trade. But then we had a distribution, and that was a nice 3-4 point trade, and then it traded into this this no demand, and you actually, once you got the signal, I was watching this live while I was preparing, you got the signal, you had plenty of time to get into it, and then boom, another 3 points down. It's just a beautiful thing. Same thing with this distribution trade here. What Mark asked a question for, one of the things that these numbers can be used for is to give us some idea of what's coming next. And you see here we had a ratio of only 18. We had and our ratio here was a minus 221, a ratio here minus 139. Well, what's happening? Well, here this is a lower low, but this number is a higher low. What's going on here? Well, this is gone from 18 to 91. They're buying, right? Very light selling, only a minus 27 right here. You see, this is information that you're not going to get anywhere else. And if you take this trade, that's fine. What did I tell you though? I told you, I'd like to see a really high number. Okay, this number isn't high. It still worked for 3 points, don't get me wrong. But what are you looking at? Well, when you're in this trade, and the video I just did about this last week, is you really need to see some kind of confirmation in the cumulative delta. And they sold less than 1,000 contracts to get it down here. Now that is twice as much as was sold from this point, but you got to be worried when these numbers are not very high. And this is the reason why, if you saw this live, you'd see these live numbers come up and come back down. You'd still be seeing the live numbers as it compared to right here. And if you weren't already out of the trade because you just got your 3 points, which is, like I said, what I do, you're given the live number right here, which probably would have been significantly higher than this, and you're being given need to know information, and that's kind of what's important to me. Now I wanted to illustrate one other thing here, and from that trade we entered a very strong trend. I think this had something to do with, again, China tariff we'll probably make a deal kind of news coming out back here. Okay, fine. We enter a strong trend. I'm actually telling you, I'm giving you a warning here, strong trend, because I don't want you to take any short trades. But because this is a pattern, what's going to happen if the market is responding normally is we're going to get a pullback to minor support here. That's what's expected. All right. And look at the number, look at the ratio. The ratio was a negative 181, and there was actually a lot of contracts getting sold there. That's a good sign. if it was real light selling, okay, you can make your own judgment. But the selling was actually stronger than the 134 to get us there. And this leads us into what we're going to be seeing next as a pattern, and that is the exhaustion trading pattern. And we expect to see a reversal for minor here. It doesn't matter that it doesn't reach down here. This is reversing from my area of minor, and that takes us into the exhaustion trading pattern. And this is there it is right there. And this is exactly what we want to see. And then what happened when we got there? We got no demand, bearish divergence. And what this is telling you is not only were the large lot sellers net sellers there, but as price traded up 3 points, 33.50, 2 3/4 points, as price traded up almost 3 points, the large lot traders were actually the sellers. They were a net negative 366 as price went higher. So what this is, if they're the sellers coming up and we have an exhaustion trade here as a pattern, then we have order flow and we have divergence. Well, that only gives you what? That's only a 6.5 point trade. Not bad. But you get what the point is. This is the example of what I use, where I want to see a pattern combined with order flow, combined with divergence to get me a trade there. Ray asks, is the $tick live data required? The answer really is no, because it's interesting to see, and because as a Ninja vendor I only pay $5 for it, I pay the $5. But it would cost you somewhere about $75. And because we're actually looking at divergences in the contract itself, I don't really recommend my customers getting it. I have it there for legacy purposes. I have it there because, like I said, I like to see it, and I will combine it with regular divergence like you saw at the beginning of the day. But it's not absolutely necessary. We can make plenty of money just trading regular divergences that we see here and not have to worry about the $tick. Let's see. Michael asks if I have training videos. I have a ton of them. Plus, like I said, I do most of my training. I've done all my training so far one-on-one. So and I kind of like to do that. One of the things that I also like to do with my customers is this: is after when you're training, if you want, you can get a hold of me and I will go over your charts and your trades. And this is something very important because it's kind of like learning a language with Rosetta Stone or Duolingo. You don't know if you're making mistakes when you're using a computer and you're learning a language, and then you go out to talk to somebody in Spanish. You don't know if you're making mistakes unless somebody's correcting you. And I think that's real important way that I help my customers is to look at their actual charts and say, did you think about this, or this? And you know, if they say yes, I did, okay, fine. Because there's really, if I were to ask the room how many outcomes to a trade is there, probably a lot of people would say two. You win or you lose. And to me, that's not the right number. To me, the right answer to that, how many outcomes is there to a trade, is there's four outcomes. There's a win because you did everything right. Okay, so that's this right here. Okay, there is a loss, but you did everything right, and that's going to happen with trading no matter what. You know, maybe right here when this was still divergent, this is a no demand right here. I'm sorry, no supply right here, and maybe I took this trade. Maybe I had order flow develop, and then I lost. Well, that's fine, because all I'm losing is 2 ticks, and that's another real neat thing about these divergence trades. Your stops are so much tighter. My stops are generally just 5 or 6 ticks. The and sometimes even smaller when these divergences, they come up and they're testing a high, because we know if I'm getting short right here testing this high as a distribution trade, well, I know I'm wrong 3 ticks up there. I'm wrong. So we can put in these really tight stops, or another thing we can do is if we had an accumulation signal back here, we got short, and then price trades up two more ticks, where we're within just 2 ticks of the stop. That's the time to add contracts, because then you have risk rewards of like 10 to 1. You know, if you had a contract that gets stopped out with 2 ticks, you lost $25. But if that one contract made 5 points, that's fairly good on the risk reward scale. So that's these trades. These are why I've gone and focused mainly on the divergence trades with price patterns, with order flow. And you know, like I said, it's still not, you know, here's a excellent example of a trend trade. It got us our 3 points. Thank you very much. Here's our example. We're getting into this broken reversal trade right there. It got us our 3 points. Thank you very much. You know, all of these things are there and available, you know, as trades. Now, the other 2 instances of doing something wrong, or the other 2 outcomes, is, let's say you shorted back here into this strong trend and got lucky. Okay, you won the trade, but you know, if you were shorting anywhere in here today, if this was a trade that somebody made, well, and you finally got lucky by shorting right there, you got lucky. But you should never be shorting into this strong trend. And I'm going to basically give you this warning all the way back here. The only exception to that is if price is traded back right here and I got my no supply, if I got the opposite of this, and that's with the trend, oh yeah, I that's something I want. But we're hands are off the trigger right there. So if you shorted there and got your 3 points and got lucky, well, you were wrong, but you made money. But if you were somebody else that tried to short right here and got stopped out, well, that's the 4th instance. Not only was that, you know, not with any trading plan that I created, but you lost on top of that. So those are really the 4 types of outcomes that you can have, not just a win, not just a loss. I am basically done here. So if anybody has a question, type it now either in the chat or the question and answer. And I'm gonna first. Oh, actually, you know what I'm gonna do? I'm gonna come back. I'm not actually done yet. Um, I'm gonna come back to the PowerPoint, and here's all. Basically, what we can take away from this is what my system is doing is we're going to be classifying market orders, and we're going to make them into identifiable patterns. And these patterns, they're forming on most market reversals. And like I said, this doesn't just apply to the ES. It applies to oil. It applies to gold. It definitely applies to the bond markets. And basically what I'm going to do, like I just showed you in that last chart, is I'm going to teach you how to avoid high risk. I'm putting it on the chart, high risk, don't do this, and the way you make money sometimes is just sitting on your hands. And with the chart that we had in front of us, well, I think that was like an hour and a half where you just had nothing to do but sit on your hands and and wait. But if you sat on your hands and waited, well, you took a trade at the high of the day. I think that was, um, you know, but that's using all of your tools. Um, my order flow suite, it makes it so easy to understand order flow volume and these patterns because, I hear a lot, is there anything I need to learn with order flow? No, there's not, because all these patterns, they're right in front of you. The only thing you really need to learn is about the delta strength and when to use the delta strength. Uh, as I was saying, when the delta strength turns black, indicating heavier extreme trading. That's really the only thing that with order flow you have to learn. Um, and probably the most critical thing that this does is it shows you the size of the order and not the size of the fill. The other programs that tout order flow, they're useless. Um, and then, like I said, you need these to effectively, and that's really a good word, understand the order flow and price patterns. And I can't tell you how much Bloodhound is right now helping me understand what is a good trade and what is not. It's tremendous to be able to play with different settings and not take a week to try to figure out this information. Um, I'm trying to get all of my information about the entire system out there, but I was so happy when last week I finally got my full complete version of Bloodhound done, because now I can start doing some of the things that I've always wanted to do. And basically I tell my customers they have to do also is go and type and make a trading plan. So this is a really the use of Bloodhound with this is a tremendous advantage to very easily understanding what is a good trading plan. And the last thing we can conclude is you've just seen that the system offers these high probability divergence accumulation and distribution indicator. Now, basically what I charge is for the basic system itself. Without Bloodhound enabled, I charge $2,695. And I'm going to put a link into the well, maybe I'm not. Oh, wait, there it is. I'm going to put a link into the chat with the link to my license page. Um, the the um, the software's, like I said, normally $26.95, and I provide everybody with the basic price patterns software for free. I don't charge, when I go from NinjaTrader 7 to NinjaTrader 8. But what I did have to charge for, because this thing, to get this new software and to get it Bloodhound compatible, cost me nearly $5,000. So for the Bloodhound version of my software with the Bloodhound outputs, I charge $395 for that, and that's basically, like I said, to cover my costs to create the indicator from scratch. The old indicator couldn't be saved, and we basically had to go to a blank sheet. So for new customers, basically I will give you a $300 discount on that, on the software. And if you contact me, I will take, and we work out a digital delivery, I will take an extra $100 off. So basically you will, for new customers, new customers will be getting the Bloodhound version for free after we've worked out digital delivery. Richard asks if I provide a trading plan. No, Richard, I can't tell you a trading plan, because that would be a bad thing, and I'd get in a lot of trouble for it. But that's something that you have to do yourself. Phil asks a question about arrows repainting, moving, or disappearing. Yeah, Phil, from day one, I've never had my indicators move, repaint, disappear. So that's not a problem. The divergence indicators, what they do is when they become non-divergent, you have the option to leave them on the chart, and there you go. Patterns are never going to disappear, and like I said, the only thing that changes is the open order flow bar, like you saw in the demonstration, and that only makes sense, like I said, because that's open. And you were asking a question about when the arrow for counter trend trade is printed, and like I said, it starts to print as price trades to that pattern, and we control that within the software itself. So if you want to see it 2 ticks away from a pattern, and basically what's going to happen is the price is going to start, the indicator is going to start showing you the pattern right here, and it's going to stop moving once it touches the zone. So when I say there's a 2 tick window, and like I said, you set that, that's basically how it works. I don't move this down there. The only exception to this, and this is obviously something I document, is where we have an exhaustion pattern here, Phil. And basically in an exhaustion pattern, and again, this is one of the great things about Bloodhound, because I'll be able to get this statistic now a whole lot faster. Previously, I'd gone and gotten a statistic that says about 40% of the time an exhaustion pattern is a test of a high, exactly what we have right here, and then a sell-off. So the other 60% of the time we trade higher, and we can trade as high as the blue zone right here. So in the case of an exhaustion trade, we don't want to necessarily close up our window, because if we close up our window, well, by definition, you're getting rid of 40% of your winners. And like I said, that's an old statistic, but that's basically what we're seeing right here. We don't want to get rid of all those winners. So this is an instance where we could have a trading pattern right here, but then trade higher and have another order flow signal up here. So full disclosure, that is the only one that's going to move. And like I said, nothing is ever going to disappear unless like these divergences here, if you don't want to see them, then there is a setting within the software that you can make them disappear. But I want to see them, so I want to learn from them. So that's really there. And again, asking about a set of rules, and like I said, my set of rules are my set of rules. You can learn from them, you can test them in Bloodhound, which again is the whole purpose of this. So very you have a lot that's going to be there. Well, like I said, what my future is these signals right now are exposed in real time, but there's a few bugs with them, so I need to get that worked out. One of the other things that is going to be in the future is a special indicator that I'm going to have developed very shortly that will take a trade right in here, which will send Bloodhound a signal right in here if we have either a extension zone or an absorption being created right in here. And the purpose of that is to use either Blackbird or Raven. And if this was our divergence trade that we were looking at, what I would have is I would have Blackbird or Raven over here, and I would only be looking for a short signal. So I would tell it to arm itself for a short signal, so that if I did develop this intra bar, I could get into it immediately. So those are the next two pieces of software, because what I don't want to do is, if this was our buy down here where we have the one tick from the low extension zone being created, I don't want to wait until the bar's closed. And I can do this very easily. Manually, but if I can get it so that I can get the software to do it even easier, might as well do it. So what I basically have is, in the order flow software, I can tell it to discriminate and give me a certain amount of minimum contracts for a delta, and a certain amount of minimum contracts for the for the minimum delta and the minimum number of contracts needed to discriminate, so you don't get a trade if there's only 1 in 4 being traded right at the beginning, so you don't get something like that. You can put that you have a minimum delta of, say, maybe 100, and say a minimum contracts of 30. What that means is that there would have been at least 30 contracts traded down there. So that's something that will help the Bloodhound, Blackbird, and Raven traders get into these trades when a divergence signal shows up. So you can just sit over here and click long off or short on, whatever, I forget which one it is. You click short on, and when you get that signal right there, boom, you're in the trade. Beautiful thing. All right. I don't see any other questions. Um, so, Keith? And and one thing to add to what Keith is saying, for me, the entry into this trade is so easy. I there you know there isn't a lot to do to enter a trade. And this is again where Bloodhound excels at, because what it's going to do is Bloodhound is going to take you and it's going to focus you to where you have the trend trade with your order flow. Okay. So the to me the entry is the easiest thing in the world. I'm good with the entry. The hardest part in the world is the exit. Okay? And because I can give you a 10 out of 10 scenario why you want to be in this trade. And here I can give you a 11 out of 10 scenario why you want to be in this trade. I get that's the easy part. The hard part, which requires the work, is there's actually two parts. What do you do when you're in the trade, and how do you get out of it? Because getting out of it, you are not going to have the 10 out of 10 setup that you see to get into the trade. And with Bloodhound showing you, you can ignore the signals that you never would have gotten into. Um, uh, oh, yeah, okay. Well, it looks like most of my signals we got into today. Uh, but you can ignore the signals that you wouldn't have gotten into. But the other thing is, you can then go to like this trade right here, and especially with these cumulative delta numbers, you can understand what that looks like when it fails, because you're going to be able to see, you replay these numbers and see these in real time. And that also brings up one other software enhancement that I'm going to be having. And what I'm going to do is I want to drop the live number. Okay. So here's the live number. Now what the programmer didn't give me is he didn't give me the live ratio, which I wish he would have. But the live ratio is easy enough to add in. But what I want him to do for me next is to drop that live ratio down here as a histogram, because what I feel it's going to show is in a distribution trade. I feel like I showed in the video, that number's getting higher into this distribution trade. Not this one, because that wasn't a good distribution trade. But that number is going to be getting higher. But if we're making a typical say trend trade, or say this reversal trade right here, what I expect to see is these numbers actually falling off. So at the apex, it was only a 44th, so that's a fairly light number. Well, what I'd be interested in is looking at this as a histogram and watching this. Maybe it was 110 right there, and then by the time it got up to here, just one tick higher, it's all the way down to 44, encompassing all the selling that came right here, and maybe a lack of buying from the large lot crowds. So that's another really interesting thing that I'll be able to put on this chart, and in the not so distant future, probably about a month. Okay, sorry, Keith. Go ahead and keep wrapping up. No, I'm great. Just the numbers on the screen now. You want to get a hold of me either through the email or through the phone. And I thank you for the opportunity, Keith. It's been a great little hour and a half.